Hey, good morning, everybody. Let me check the date. Today is Friday, October 20th, 2017. So daily Forex trading strategy webinar. Let me remind you that trading currencies is risky. Hey, look at that. Trading currencies is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. This is really funny because my desk is like, hello. My name is Wayne McDonell. Nice to meet you. I'm a currency trader. What do you do? Oh, you do Forex. That's so awesome. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. My goal is to share my experience and help you become a successful Forex trader. Everybody okay with that? We have our goals aligned. Anybody want to be a professional Forex trader? Shug says, sir, what do you think about Japan's election and the empire swing? I don't know anything about it. I don't know what the outcome is going to be. I don't know what people's portfolios are set up as. Bottom line is Abe's political party will win. The question is, will they maintain a 2/3 seat majority? Probably not. What will that mean for the end? Probably nothing. But you should totally freak out about Catalonia. So long story short, probably won't mean anything, but it's your job to be a risk manager. If there's a surprise out of the elections in Japan this weekend, then you need to be there and be ready to respond. That's all. Right? That's what your job is, to be there so that your client doesn't need to be there. Have you been using it though? They're like, oh, blah, blah, blah. What, did you see what Trump said? No, but how about those Japanese elections coming up this weekend? You on that? People are like, Japanese elections? I should be worried about that? I'm like, oh my God. You don't got your eyes on the, what if Abe loses his 2/3 majority? Right? All of a sudden they're like, oh, thank you, Wayne. I'm so happy to have you in my life. I'm like, hey, that's what I do. I bring joy and happiness to people. It's a gift, but it's also a burden. So how we doing? We got that? We got some currencies? All right. Is it 2018 yet? Oh, it's been a long day's night. Hang on, phone's pinging and binging and banging and stringing it. All right. Okay, yeah, Robert's freaking out. That's good. All right, so here we are. You want to start with the Aussie yen? Okay. See the context? This to this to this is our general plan that we set up 3-4 weeks ago. This is the general plan that we set up in the 3rd week of August. So to have a retracement at a role reversal is not only expected but warranted, right? Like that's good, right? A 618 Fibonacci retracement that makes you feel good inside, right? 382 is better, but nothing wrong with the 618. It should be expected. And then from that base, from the 618 base, you have the higher high, higher low, higher high, higher low, higher high, higher low. And that's good too, right? So let's zoom into that a little bit. And let's discuss what we talked about yesterday. I know it's been yesterday, but okay. So in here, we had a base, then a higher high. So we said, well, maybe it'll come back to this old resistance, and that'll act as support. And that would be a buy zone. And then that went up to here. And I think what we would have done is like look somewhere in here, right? And have the old resistance act as a base. And hopefully, if it continues, would make yet another higher high. Is that how you see it? Right? Is that how you see it? Is that what actually happened? This is the stuff we talked about. The base, the higher high, the roll reversal, the higher high, the roll reversal, so on and so forth. Well, that looks like about 10 calendar days of trading. So you made money, right? Cool. All right, here's my tip jar. I'm $200 short on my cigars. And here's my tip jar. Can't be too proud, man. Can't be too proud. So anyways, but once again, we've had similar conversations. Like, it's about predicting the future. We all agreed, like, if you had a crystal ball that just kind of told you what the future would be, you would make money. And that would be like a miracle, right? But like, man, if you could predict the future, you could make money. I think everybody said yes to that. And so here we are, day after day after day, predicting the future, and day after day looking back and like, oh, look, it worked out. And I'm like, so you made money, right? And so like 4 out of 50 people say, yeah, I made money. So it's like, if it's not the intellectual angle, then, you know, something's holding us back. And you need to find out what that is, right? You need to find out what that is. And I don't know, do something about it. Freak out about it. Right. So you need to sit down and say, with you and your crystal ball, I can see this over the weekend, sitting there, honey, what are you doing in the backyard? Oh, it's just me and my crystal ball. Why? So you should be, you and your, right? You should be with your little crystal ball, you know, polishing it, loving it, and say, I'm sorry, baby. It's not you, it's me. It's not you. You're telling me the future, baby. I know. I know. I'll get on. I'll change. I'll be you make me want to be a better trader. Elias is up 5% this week. Oh, wow. That's a good week. Almost too good. So you're on that border. Be careful. You might be a little over leveraged. Okay. Ryan's like, it's confirmation on top of confirmation. I'm not sure if I get that, but I'm sure it's genius. You know, one of the things I would just practice is like these basic price action setups. Like, force yourself, not you specifically, Ryan, but anybody, to force themselves to trade the pattern. And you'll get into a point someday where every high you sets up a higher low. Every low sets up a lower high. And you know that. And that's what you're waiting for. And amateur traders seem to get involved after the breakout. They're in these candles here. They're in these candles here. And then, of course, they don't know where it's going to go, so it comes all the way back, and they get knocked out at break even. Well, you know, most of the time, if you're getting knocked out at break even, a better trader is entering the trade. You're exiting for zero. They're entering, you know. So I don't know. I don't know. And that's the thing. So if we have pretty reasonable, accurate crystal ball, and you're still not making money, then you need to have a heart-to-heart with yourself, right? Because if I'm doing the technical analysis, then it's up to you to just set up the trades and take them, right? So if I would, like I've done in the past, have business planning retreats with myself, whatever works. Okay. Well, yeah, so Ryan's talking about the price action, but you know what I think is more important? Because there's price action all over the place, right? More important is we knew. So this is part of the crystal ball, right? Like we don't know, but in our mind we know. It doesn't make it real, but in our mind we know the Aussie yen's going up in October. We knew that. We knew it was going up in August. In fact, we knew it was going up the third week of August, and it was going to go up for the month of September, and it was going to go up for the month of October. We knew that. That's just our basic assumption. So it had fallen for a couple of weeks into the beginning of October, right? Non-farm payrolls is in here, and then it consolidates around 618. To me, the money, if you will, the money shot is having a firm conviction or assumption even that the 618 should hold, that the Aussie yen should go up. Even though it's been falling for 2 weeks, it should go back up, and you're looking for support. Right? That all of this stuff in here, you're not selling. You're looking for it to go up. You're not even considering the sell side. Okay. Joe asks an interesting question straight out of like the basic methodology out of the book. It's based on the time frame that you're trading. So I don't know what your trade plan was. If you set it up on an hourly, it'd be an hourly. If you set it up on a 15-minute, it'd be a 15. Very often, as you get better, you're going to mix these up. So you're going to take the let's say the 5-8 cross on the 1 hour, but you're trading the 5-8 crosses on the 15. But you set it up on the hour, but you're going to do the 15, knowing that there's going to be at least one pullback on the 15 for the one cycle on the hour. Right, so your trigger then, Joe, would be the 15. Okay, what you're going to find is that you're missing the hour, so you're setting up basically strategically on your 4 hour. That's fine, but it's really slow, right? It's very, very slow. On this chart, the leading indicator is the pivot point. I suppose you could even count the Fibonacci as a leading indicator in this case, because we had it set up and you're like, oh my, look at that. The buy pivot just happens to be a 618. So those are leading indicators. So you're thinking, all right, well, if it falls down into here, this might be a buy zone. Okay? Because I can hear myself talking when I look at this chart, right? It's just technical analysis. I would want to buy it here in the month of October, or I'd want to buy it here in the month of October. And the lower one's better because of the pivot cluster. And that's why it's drawn this way. You can see I already have it drawn. That's the leading indicator. So think of it. There's no consideration at all to sell this. That's called strategy, right? There's arguments. You can argue all you want about down, 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 down. Great. I'm a bull. It doesn't matter. You can argue all you want. Good luck to you. I'm still going to look for support, and I'm going to look for confirmation of support. So as a buyer, I'm like, well, this is where it opened, about a 50%, right? And it's just slightly below the monthly central. So it's not the world's greatest entry, but I'm a bull, and if it turned north, that would be very interesting to me. Okay? But this is the actual buy pivot for the swing trade. Then I fib that, and I'm like, oh my gosh, is that a 618? Love it. Love it. So, as a swing trader, that's a bull. As a bullish swing trader for the month of October, you could buy it the very first day. It's all right. If it went up, you'd have to take it, especially if it's back above the 618, moving average crossovers. I mean, you'd have to take it. But this one's even better. So how about down here? Not good. How about down here? Not good. Right? It's just like, it's very obvious. Very, very, very obvious. So you take that leading indicator, then you drop into the smaller time frames, and then you start looking. So you might find the 4 hour is too slow, so you set it up and you say, well, I get it on the 4 hour, but the leading indicator might help you. So you assume the 4 hour is going to roll, but you're going to see it turn on the hourly first. So this is why I say tiptoe. And before the hour, you're going to see the 15 minutes. So find your leading indicator support. Watch for price to come down, and if it starts consolidating on a 15 and you get a little higher high, higher low, take a little shot, because then that should create a higher high. But the hourly is not done, so that needs to come back down. And then you try it again, and now you take a second 15-minute, aka double bottom on a 15-minute, and it goes, and then that makes a higher higher low on an hour. Right? And then that'll need to come down to catch the 4 hour. So now it's a double bottom on an hour. Grab that one, and now you got your bigger breakout, pullback, continuation. And so you can tiptoe and then front run the 4 hour, starting on the 15-minute, moving to the hour, and then finally, eventually on the 4 hour, but by then it's already rallied up to the 4 hour 21, which could be a couple of hundred pips on your hourly or 15. Joe's frustrated with the trading week. You know, don't change anything. Yeah, meditate's fine. Don't rethink your strategy. That's dumb. Okay? It's fine. Market conditions change and vary throughout the year. And you sometimes you get a lot of just weeks that are like that. Okay? If you have a strategy somewhat aligned with what I teach, then give it a year or two to learn your strengths and weaknesses. But that's why you need to study and measure. If you're not gathering intelligence, there's no way you can adjust your strategy, right? Your strategy shouldn't be changing to fit the market. You know what I mean? That's called backtesting. Okay? Just stay with it. Well, Joe, anybody could have made money in September, especially if I set you up for it months in advance. Okay? And then you could see, like, you could go through, let's say, August and say, I'm an idiot, I couldn't make any money, I need to change my strategy. I'm like, August isn't a good month to be trading, right? So you're going to get inconsistencies. So what I would rather you do is have a consistent strategy that you can employ throughout the entire year, and then get used to the seasonality of the year so you can adjust your expectations. But dude, you don't need a strategy adjustment. If you're buying at support and selling at resistance. Now, one reason you might be getting inconsistent results, I don't know if you're consistently bullish or consistently bearish. You might be changing that, and that's a strategic, right? That's a strategic change. If you're just a bull buying at support and moving stop to break even, when the market agrees with you, you're going to get paid. And when the market's inconsistent, not you, the market's inconsistent, you won't do much. But you got to look at it from an annual point of view, right? You got to get out of the day, you got to get out of the week, you got to get out of the month. Look, every trader is going to have break-even months, right? And mediocre months, and every so often you should have a good month, but it shouldn't be the cusp of what you do. Most of your months should be very modest and mediocre. Right? It should. Remember, if you're doing things right, your results are indicative of market conditions. So if we have mostly a mediocre week, especially if you're trading dollar, okay, that's fine. It's the market conditions, and it'll line up with the beta. Okay? But don't change your strategy. All right, so here I am on gold. We want to buy it here, or we want to buy it here. Okay? Do you see me doing things like, oh, yesterday I was a bull, so now I'm a bear, and then maybe Monday I'll be a bull, and then maybe later I'll be a bear? We have things like, okay, it's made a higher high, so we want to buy a bounce at a pivot cluster and a fib level. Would you agree that 618 seems to be important? Would you agree that monthly M2 seems to be important? Now, you might have bought it here and went up, and maybe you made some money for a while. Maybe you jammed your stop at break even. I don't know how you handled it, but fine. Came all the way back down. Well, it's still at the 618. It's still at a monthly pivot. It's oversold. Do you buy it again? It shouldn't be emotionally disturbing. If you're a bull and you're at support, you buy it, move your stop, move on. Right? One and done, and on to the next one. Okay? And if it goes further south, then forget about it, right? You know your lines. You like it here, you don't like it there. Because you're in control. Because you're a beast. So I might have to go, yo. I got an electrician swinging by. They got a internet problem that needs to be fixed. So I'm keeping an ear open. I might have to bail really quickly. So I apologize now. Happy New Year, by the way. Oh, boom. Just like that. I gotta go. Sorry, guys. Have a wonderful weekend. Peace on earth. May the pips be with you. May your profits be above average. Love you, babe. Gotta jump.